Dear guests, esteemed panelists, ladies and gentlemen, good morning from Berlin and welcome to this second edition of the virtual panel series hosted jointly by ICMA, the Covered Bond Report and the German Pfandbrief issuers. On behalf of all three, I do thank you for your time and for signing up in such numbers. I heard about more than 750 participants today for our joint event. Before we get to the main event, the reason for all of you to tune in, allow me some brief introductory remarks. My name is Jens Teugmit. I'm the Chief Executive of the Association of German Pfandbrief Banks, VDP, in Berlin. We are the industry body of Pfandbrief issuers, and as that, have been curating Germany's major financial export for many, many decades. The Pfandbrief, which has now been around for some 252 years. To us, the foundation of this long and successful trajectory is twofold. Tradition and innovation is what has characterized our product throughout its history. Traditionally, strict legal standards and conservative valuation principles, combined with frequent updates and amendments to its legal basis, the Pfandbrief Act, as well as constant product innovation, keep it up to date and make sure that it continues to meet investor demands. Pfandbrief issuers tend to think about the Pfandbrief with its specific features as a sustainable investment product in its own right. And it is for that reason that they do also think that it pairs perfectly with what we call today sustainable finance, as well as the dedicated regulatory initiatives aiming at securing Europe the global leadership in that area. Regulation, however, is a double-edged sword. Too much of it will put the dynamics of hitherto prospering markets and their contribution towards decarbonizing our economies at risk. Or, to put it differently, regulatory over-ambition might lead to underwhelming results. Just a few weeks ago, in the beginning of September, the EU Commission presented its own green bond framework for the green bonds to be issued under its next generation EU recovery program. Brussels wants to issue around 30% or up to 250 billion euros of its 750 billion euro program as green bonds, and thus become the world's most important issuer of green bonds. The next gen EU green bond framework already tries to incorporate much of the EU green bond standard proposed on July 6th. With this important initiative, the Commission seeks to introduce its own official label or stamp of approval based on well-known private initiatives such as the ICMA Green Bond Principles or the Climate Bonds Initiative Climate Bonds Standard. The consultation period for this piece of regulation only ended on Monday this week. What are the concerns of the German issuers in general? Above all, they argue for the Green Bond Standard to be established in a practical manner. Most importantly, two amendments to the draft EU Green Bond Standard seem crucial to really enable it to stimulate the green bond markets and thus contribute to and make the European Green Deal a reality. Firstly, grandfathering should be a basic principle, which means that the technical screening criteria in force at the time of the issuance shall apply throughout the lifetime of a bond, regardless of these criteria being continuously developed and refined further. In order to provide legal certainty to issuers and investors alike and prevent any negative impact on the price of EU green bonds already issued and to fully develop their potential, green bonds, once issued, must not lose their green status. Secondly, for issuers, there are still a lot of question marks regarding the ability of their bonds to be fully taxonomy compliant from the start. We therefore advocate to start with an 80% taxonomy alignment instead of 100% for use of proceeds bonds, and to introduce a transitional period of 5 years to reach 100% taxonomy alignment. Especially with a view to the complex do no significant harm criteria and poor data availability, such a phasing period would be practical and helpful given the multitude of other challenges the taxonomy confronts banks with. A 100% requirement with no transitional period will most likely force issuers to choose other well-known and established sustainability standards when issuing a bond. Ladies and gentlemen, in short, the EU Green Bond Standard is full of expectations. Some very positive, and some maybe not quite so positive. It is really designed to be, is it really designed to become the gold standard in sustainable issuance? Is it the big leap forward, or is it too high a bar, to take up the headline of today's event? Before passing the floor to Neil Day, today's host and one of the key chroniclers of the covered bond industry, as well as our distinguished fellow panelists, I would like to thank all of them, and of course you, dear audience, very much for participating in what certainly promises to be an hour of intense debate. Last but not least, a great thank you to ICMA and its team for hosting today's important virtual event with fund brief issuers again. And now, Neil, I would like to hand over to you.
Thank you, Jens, and good morning to everybody. Yes, thank you for taking the time to join us this morning. As you can see, I've got a great panel of speakers, experts to join and to share their views and knowledge of this subject with you. I'll start off by asking them to introduce themselves. Perhaps Özgür, you can kick that off.
Thank you, Neil. I'm Özgür Altun, and I am an associate at the International Capital Market Association, focusing on sustainable finance. Previously, I worked at international financial institutions such as the EIB and the Council of Europe Development Bank, as well as law firms based in Istanbul and Brussels. Thank you very much.
Yeah, thank you. Hi, everyone. I am part of Natix's Green and Sustainable Hub. I'm leading the team in charge of the structuring of financing, green and sustainable financing, of course, and advising clients on sustainability issues.
My name is Axel Fagner. I work for the European Commission, and I'm part of the team that designed the proposal for a European green bond standard, and I'm now working on taking that forward.
I'm Ela Crevi. I'm head of EIB's Capital Markets Department. And I was also part of the technical expert group's subgroup that work on the proposal for a green bond standard. So I'm quite involved with this.
Great. And last but not least, Bodo.
Yeah. Hi, my name is Bodo. And first of all, thanks for having me in this, what is going to be, I think, a very interesting discussion. I represent Berlin, a member bank of the VDP, and there I'm head of funding and investor relation. And of course, funding also includes the issuance of green bonds.
Right, great. Okay, well, thank you all. And I'm Neil Day, managing editor of the Covered Bond Reports, if anyone missed that. Axel, we'll start off with you to perhaps just kind of kick things off by introducing a bit what the goal is. You know, you said you've been involved in the team that was putting this together. What really is the Commission hoping to achieve, and and how, and why the need to do this, given that we do have quite a very vibrant and increasingly vibrant green bond market out there already?
Yeah, thank you, Neil. So what is the Commission hoping to achieve? Well, we've been watching the green bond market for a while. I think all of us have. Clearly, green bonds are a very useful tool for many reasons. The main one probably being that they help us to finance the type of large-scale climate mitigating investments that we need to transition to a climate neutral economy. As you might know, this is an aim of the EU to complete this transition by 2050, and in fact, we're working on turning this into law. So green bonds are one of the tools that can help us to do that. We've seen that the market has grown a lot from its inception. The figures that we have show a five-fold increase in issuance over the last 5 years. And one positive development is that the EU is leading this market with about 51% of global issuance in 2020. Now, at the same time, we do see that there are certain challenges. For example, there is significant potential to scale up and raise the environmental ambitions of this market, not least when you consider the small size of the green bonds to the overall or conventional bond market. We estimate that green bonds are about 2 to 4% of the total volume of bonds. So here there's room to increase. At the same time, we see that as the market is growing, there is a growth in the range of the types of well, first of all, the types of the definitions of what is considered a green activity, and connected to that, what is considered a green bond. So the range of views on what is considered a green bond is growing, and we see that in certain cases this might create uncertainty for investors, and in the worst case, this could increase the potential for greenwashing, particularly as the market keeps growing in the years ahead. So based on this, the EU took the decision to establish a green bond standard quite early on. In fact, it was an action announced in our 2018 and the Commission's 2018 action plan on financing sustainable growth. The Commission appointed a technical expert group and who helped us with designing a draft or a first outline for such a green bond standard. Ayla Cravey from the EIB on this panel took part in that, and we're very grateful. Based on the work, the very good work by the technical expert group, the Commission took this forward, and on the 6th of July of this year, this became a proposal for a voluntary green bond standard. So this is just a proposal from the Commission. It still needs to be adopted by the European Parliament and the EU Council before it becomes an actual EU regulation and enters into application. So I'd just like to maybe quickly go over what I consider the four main points of this standard. The first point that's very important to keep in mind is that it's a voluntary standard. This means that if you follow the requirements of the standard, you get to call your bond a European green bond. But you don't have to. You can also choose to align with other standards or not align with the standard. We don't intervene in that. Also, we call this a gold standard because we want to set a benchmark or an example for the rest of the market. The standard itself is quite ambitious, as you will see, but we are not expecting that everyone will make use of the standard, certainly not at the beginning. So when we say gold standard, we're referring to the high level of ambition of the standard, not the idea that it would necessarily be used by everyone. The second point that's very important is that the standard will be closely aligned with the EU taxonomy. In fact, the main requirement of the standard is that 100% of the use of proceeds from bonds, from European green bonds, must be allocated to economic activities that are aligned with the taxonomy criteria. This means all the criteria that are mentioned in the taxonomy regulation. As you might know, we have several criteria there. Substantial contribution to an environmental objective is one. There's also do no significant harm, minimum social safeguard. Those are the three ones, and this is specified in the technical screening criteria set out in the delegated acts that the EU is also working on. Now, why do we have this criteria? Well, the taxonomy is, as you might know, based on criteria that are Paris aligned and based on science, on scientific advice. So it provides these sets of quite ambitious definitions that are also the realistic ambitions that we need to use if we want to meet our climate goals. What we see in the market today is that there's quite a bit of confusion about what exactly is considered green, and we consider that for investors, it might be beneficial to have one set of common criteria. And this is, of course, the aim of the taxonomy itself. Now, by requiring alignment with taxonomy, we are in fact helping issuers to transition towards higher taxonomy alignment, either because issuers want to develop new projects that are aligned with the taxonomy. They can do that. They can use the EU GBS, which is the acronym for the European Green Bond Standard, to fund capital expenditure, investing in new, let's say, factories or buildings or what have you that is taxonomy aligned. And that's why we have these taxonomy alignment plans that you might be familiar with. If the project, if the issuer can show in a plan that the project will be taxonomy aligned upon completion, and they have up to 10 years to do this, then they can fund it using a European green bond. This also allows issuers, of course, to, even if they might not be very taxonomy aligned today, to issue a European green bond and increase the overall taxonomy alignment of their assets. The second point is that the standard is open to all issuers. So everyone who issues a green bond today should be able to issue a green bond under our standard. This includes issuers inside the EU and outside. It includes all types of bond issuers. So corporations, financial companies, public bodies, and even governments. And we're also open to all types of green bonds, of course, so including covered bonds and even asset-backed, other types of asset-backed securities. Now, the third point is that the standard will be based on market best practice, meaning that just like the Climate Bonds Initiative, ICMA's green bond principles, well, maybe more closely aligned with the Climate Bonds Initiative, actually, we would be requiring both pre-issuance and post-issuance review. We would be requiring regular disclosure of allocation, meaning that the issuer has to show that they're allocating the proceeds of the bond to taxonomy-aligned projects. And finally, we include another novelty. This is something we can do because we are, of course, a public body. So we are creating a system for registration and supervision of external reviewers. We do see that external reviewers play a very important role in the market, and there is insufficient standardization and also transparency in certain cases on how they operate. So we wish to provide investors more assurance on this, and we have in our proposal set out that ESMA should act as the supervisor of external reviewers. So to conclude, we think that based on the strong alignment with the taxonomy, the strong focus on market integrity and investor protection, that our standard, the EU Green Bond Standard, will set a new benchmark. And we think that, or we hope that we can position Europe as a world leader in green bonds, and also set the stage for continued growth of the green bond market based on high environmental ambitions. Thank you.
Okay, Axel, thanks very much for summing that up for us. Now, Özge, I mean, as I think Axel's already mentioned and is widely known, obviously the green bond principles, which ICMA handles, has led to a lot of the growth that's been mentioned, and we've already had a question, kind of a couple of questions mentioning kind of how good they are, I think, or referring to that. I mean, to what extent do you find it's kind of worthwhile what the Commission is doing? Are you welcome the fact that they're coming up with the green bond standard?
Neil, thanks. Let me start by saying that ICMA very much welcomes the proposed voluntary nature of the UGBS, which is in line with what had been recommended by the technical expert group. This was important in order to avoid any fragmentation to the existing green bond market, the bulk of which is already based in the continental Europe, as Axel mentioned. I will say that the EU GBS already builds on the existing market standards, such as the green bond principles, and this has also been made explicit in the text of the proposed regulation itself. Apart from the taxonomy alignment of use of proceeds, nothing is really revolutionary to us in what has been proposed, and most of the requirements and formalities were already market practices. However, the taxonomy alignment concept is an additional feature and the most important justification for the European Commission to come up with its own standards. As you know, under the green bond principles, we have a higher level list of eligible project categories, but we don't take a position on what is green or not with granularity or eligibility criteria. This has historically rather been left to investors to determine so far. So establishing a clear link with the EU taxonomy therefore addresses the eligibility issue with detailed criteria and thresholds, in a way centralizes the eligibility process, which was otherwise handled by each investor based on their own opinions. Furthermore, the concept of forward-looking taxonomy alignment, where issuers can issue an EU green bond to meet the taxonomy criteria in 5 years or even in 10 if justified, is a strong positive. With this, the intention is to make the EU GBS a useful tool for transition, but not solely a tool to finance what is already green. Having said those, we believe the fact that the proposal doesn't introduce enough flexibility on the taxonomy alignment will eventually impede the success and uptake of the label. The flexibility idea was proposed by the TG and would apply where a literal taxonomy alignment is not feasible due to the location and/or innovative nature of projects financed, and with a safeguard, with an important safeguard that an external reviewer would confirm substantially contributing and no significant harm nature of those projects to the EU's taxonomy's environmental objectives. So the lack of flexibility would not only limit uptake of the label from third country issuers, but also would prevent European issuers who may have assets in third jurisdictions from financing those via EU green bonds. It also disregards that these different countries are at different stages of development and transition, and some projects or activities that may be dark green in, for example, in emerging markets, whereas they don't qualify under the EU taxonomy. On that specific point, I would like to finish by saying that the very same flexibility idea is now actually incorporated in the upcoming green bond of the EU, where it is explicitly acknowledged that there may be activities or projects that do not qualify under the taxonomy, but may still be substantively contributing to the taxonomy's environmental objectives. It's also adopted under the EU GBS itself for sovereigns, as well as disclosures under the Article 8 Delegated Act for investors' non-EU exposure. So in that sense, the flexibility is now to some extent incorporated whenever it's seen appropriate by the European Commission in other regulations and legislations. So with that note, I would like to finish my. Thank you very much.
Okay, thanks. I mean, we'll come back to go into a bit more detail on a few of those points later on. I mean, Laurie, what's your take on this? I mean, is it kind of value added in this and what the Commission's proposing? Does it go, you know, really improve massively upon the green bond principles and what we've seen already?
Yeah, so it has been mentioned. I think one of the main, let's say, added value is based on this taxonomy alignment in terms of integrity, and we heard that this is one of the main objectives. So I think this is, and the strict alignment with the taxonomy is part of the response, and we encourage that to have really a limited option for flexibility in order to really continue to have this integrity, which is the main objective, and limit the range of green bond that we see on the market. And it could appear to be a minor evolution, but I think it's a huge one. This linked with the fact that this is a standard. This is not principles, this is not a guidance, this is really a green bond standard with an official accreditation that you must receive from an external reviewer with a verified system and something in place for that. So this is robust. And when the principles are saying, we recommend to, the standard is saying we require to. So it defines really a minimum level of requirements with mandatory level of expectation. So this is key. So it means that you must be fully aligned with many requirements. And we sometimes add question on the market on, what are the market practices, what the principles are saying, and there is no debate. So it's defined clear threshold, clear requirements, and I think this is key to at the end to reach the objective of the European Commission to at the end to have to set a new benchmark with high level of ambition. So I think in terms of added value, it will be that it will really reduce the potential discrepancies that we see now between different green bonds in terms of range of, let's say, ambition or level of green, but as well in terms of SPOs, external reviews. Clearly, we see some different methodology, different level of expectation from the reviewers. So it will, again, define a common standard, common level of expectation. This is clearly defined in the proposal, what should be done by external reviewer. So it will as well bring a lot regarding the external review landscape. This is again leading to the reduction of the discrepancies and alignment in terms of high level of practices on the market. Having said that, and we will continue to debate around that, there is potentially some clarification or some missing point that have to be addressed potentially, and we will of course continue to speak about that. But main added value, integrity, and the fact that this is a standard just define clear limits, and you're sure when you have an EU green bond in your hand that you are in line with these requirements.
Okay, thank you, Laurie. And I mean, obviously the EIB as well as an issuer is very important, and as you mentioned, and AXA as well, you've obviously been involved in these discussions. Are you happy with what's being proposed? And I mean, similar to what I was going to ask, we've already had a question: how committed is the EIB to 100% issuing EU green bonds?
Thanks, Neil. Well, if I can take that from the two angles, as what concerns EIB, and then I think the general view for the market. For EIB, I think this is not a huge problem because our climate awareness bonds finance only climate change mitigation activities, so renewable energy and energy efficiency. And these are pretty clear, and we will hopefully soon have the delegated act on these objectives. So showing that you are 100% taxonomy aligned should not be too difficult, and the other aspects as well, I think we can live with. But then we have this other product, which is sustainability awareness bond, where the environmental side is currently dedicated to biodiversity and everything related to water systems. There, of course, we don't have the taxonomy yet, so that is not something where we can show 100% taxonomy alignment already, because the taxonomy will not exist. So I think that having been part of the TEG, and there were many of these questions that we discussed almost endlessly back then, and I think this 100% taxonomy alignment is something which I understand that there's a legal technical problem how to formulate this, but when we were discussing this in the TEG, we never thought that one should say that, well, you can do an EU GBS bond, which is 90% used for green purposes. Of course not. That is already in the green bond principles, that you use 100% of the proceeds for green projects. But what we did mean was to leave some flexibility, so that, for example, right now we could do projects still in the areas where taxonomy does not exist, because this will now, if you want to do now EU green bond standard aligned bond, which uses proceeds for, I don't know, biodiversity, you can't, because that doesn't exist. And the other thing is that, for example, you see in areas like pollution prevention and circular economy, almost every day in the social media, you see stories about some new startup creating, or not even startup, creating new technologies to prevent pollution or work with more efficiently with circular economy. And if they are new, they will probably not be in the taxonomy. It will take some time for them to get there, and so it would not. You could not finance those with your green bonds because you can't prove the taxonomy alignment. This is more what we were thinking, that leave a little bit of flexibility. So I'm a bit sad that we did not see that, but as Axel said, this is not a final proposal yet. And the other thing is, of course, this if you have changing criteria, which we thought that we understand that one does not want to have green bonds which are not aligned anymore to today's standards, but on the other hand, it will just create a conundrum in the market if you have something which is green for the first 5 years, but then not anymore, and that means that it's never going to be green even from the start. So we thought that for clarity reasons, it would have been good to keep it just, all the way. But I think it's, as Axel said, it's not meant to be used by everybody, and it is a voluntary guidance indeed, also, as Oskar said, or voluntary standard. But then if you use it, then you have to go through these steps quite rigorously that are in there. So I think it might make the usage fairly small at the beginning, all these reasons that I mentioned. But I think it's, for example, if you think about climate change mitigation, when you finance renewable energy, I think most of that should be fairly easy to adapt, even starting whenever it comes into force. So I think there's sides and sides. For EIB, I don't see a problem, but for market in general, I think there are some challenges, or rather aspects that push it forward by some years, and it cannot start as vigorously as it possibly could have started.
Right. Thank you. I mean, I'll just turn to Bodo, but then Axel will come back to you to maybe just go over a couple of those points. I mean, Bodo, yeah, you've been an early adopter of quite a few formats and set a high bar yourselves in what you've been doing. Is Berlin HIP going to be, you know, an early adopter of the green bond standard? And I mean, you're a member, as you mentioned, of the VDP, and Jens has already mentioned a couple of the issues that we've already discussed, the grandfathering and the 100% use of proceeds. What's your view on all of this?
Okay, so first of all, thank you for the question. Second, we welcome a common but voluntary European green bond standard. I think speaking about this standard, you always have to look at two sides. On the one hand side, the formal aspects of that standards, we have already heard they built on experienced standards that are in the market for quite a time. CBI was mentioned, the GBP was mentioned. On the other hand, you have, of course, the content of what will be a European green bond. And then we're not so much speaking of the EU GB anymore, but rather about the EU taxonomy and the requirements and criteria put there. So everybody knows, I think, for everything related to construction and buildings, these requirements are challenging. Anyway, we are on our way at Berlin HIP to incorporate the criteria into our green bond framework, and I'm quite convinced that in the not too far future we will be able to present something. That is good. Then the other question remains: how fast will we succeed together with our customers to originate these assets, and to help creating those buildings that fulfill all the requirements set out by the EU taxonomy. And there we have a plan, yes, but we do not have any glass bowl. So this will depend very much on the market. Coming to the more formal aspects that were already mentioned, and maybe also reflecting on Jens' two main concerns that he mentioned at the beginning. This grandfathering topic is a big issue, especially for banks. I think even more for banks than for other issuers. Most banks use an approach that is referred to as portfolio approach. That means it is not about a single project or 3 projects or whatever, and then they are refinanced or financed by one single bond. But it is the description of eligibility criteria that various financial assets in the portfolio have to fulfill. And therefore, I see these difficulties even bigger with having no clear grandfathering rule in place, saying, okay, for both sides, the bond and the underlying assets, a grandfathering is guaranteed if both of them, the asset and the bond, met taxonomy criteria at the time of their origination, respectively, their issuance. I think especially in mortgage lending, this is an important topic because and therefore, I think we really have to speak about the assets at this point as well, because mortgages are have a long-term financing character. So a long time that they are on the balance sheet. That is even more true for residential real estate lending rather than for commercial, what we do. But even there, most loans exceed a maturity of 5 years. As banks, I think more and more banks tend to incentivize assets that are green or in the future even taxonomy aligned. They need to have some clarity from the beginning that what is green today is considered green / taxonomy aligned for the time I have it, because I base my pricing on that, and thus have a tool to motivate customers to rather invest in a green building than a conventional one. So that is a big thing. The other one that Jens mentioned, maybe not fully aligning with the taxonomy, but this 80%. I understand very well that this is meant, of course, to increase in a timely manner the potential of issuers issuing EU green bonds. I am personally, and this is a personal view of mine, I have a little bit my problems with that, because I think then rather I would prefer to issue a smaller bond, but then all assets are 100% taxonomy aligned, then issue a bigger one and have this 80% approach. I think when it says this is a EU green bond, and it says also that it is based on a European definition for what is a green activity, the EU taxonomy, then in that bond should be what is defined by the taxonomy. Yes.
All right. Okay, thank you, Bodo. I mean, Axel, I mean, I think one of the things there is this 100% taxonomy alignment and the grandfathering are two of the issues that keep coming up. And I think that one thing in particular, I mean, the Commission, as far as I understand it, did differ a bit on what TEG had proposed in that respect with regards to flexibility. What's your kind of, I suppose, your thinking on why you came up with what you did? Are you hearing what people are saying and thinking maybe, you know, there is something we could change there?
Yeah, no, there were certainly a few points raised there, so I'll try to maybe touch on the main ones, and then we can, you know, discuss more later. Okay, the first point to make probably is that, as I mentioned, and as Ayla, you know, also said, it's a proposal at this stage from the Commission. There is an EU legislative process that needs to be carried out. This means that we actually have to think a little bit forward when we're working, because the standard won't enter into application next month. It will, you know, there will be considerably longer before it does enter into application. It is a bit difficult to say exactly when, because it really depends on how quickly the co-legislators, as we call them, work on this. Well, it won't be this year. And what that means is that and also we, of course, need to think that the standard will be around for a while. So it's not, as I mentioned, that we want everyone to switch to the EU GBS immediately. In fact, it is completely voluntary, but you know, you might think that issuance and use of the standard might increase over time. So we kind of have to think a little bit ahead and look at where do we want to be in maybe 3, 4, 5 years from now when we are talking about this. So that was the first point I wanted to make. Now, obviously, in the proposal that the Commission has made, there are quirks that probably that people have pointed out to us. Maybe little things that that wouldn't work, or for practical reasons could be improved. And of course, this is why we have the whole process. And those things will probably be ironed out by the time the final standard is ready. Now, at the same time, there are certain fundamental things that that are important to sort of keep in mind. First of all, on the taxonomy alignment, now that is indeed a pretty key point for the Commission. We do think that we need consistency in how the taxonomy is applied, because otherwise the benefit of having a common definition sort of goes away. So we need to be very careful about introducing loopholes, for example, depending on what type of, whether we're talking about a bond or another type of instrument or financial product, etc. We want to have sort of one definition for the market of how to interpret the taxonomy. And we don't want to confuse matters too much in this sense. As I mentioned, there's also a legal requirement on our side. So when we're referring to the taxonomy, that is an article in an EU regulation, and it's not really a pick and choose approach. It is in fact all the criteria of that article have to be applied, including the technical screening criteria. Now, first of all, why didn't the EU or why didn't the Commission fully apply the European Green Bond Standard and the taxonomy in the next generation EU green bonds, which we have started issuing this year? Well, I think there's an important timing constraint. So the European Green Bond Standard is only at the proposal stage. It is not a final standard yet. However, the EU's issuance of green bonds has already started now. So, of course, that would have been very difficult to apply a standard which is not yet complete. And also on the taxonomy side, the taxonomy is a tool which is very much under development. The first, so far we don't have any technical screening criteria that have been formally adopted. Although the first delegated acts on climate mitigation and climate adaptation have been proposed by the Commission, are working their way through the Parliament and the Council, and hopefully those will be adopted and ready to be used quite soon. But that will only be the beginning. I mean, after that we have more delegated acts coming. So, for example, the Commission announced in July that, and I'm not working on this personally, so I'm not really an authority on this, but this is just what I've heard, that the Commission will come forward with more delegated acts on climate mitigation and climate adaptation, also quite soon. So this will capture certain economic activities that have not been captured so far. Then, as you know, there are 4 additional environmental objectives in the taxonomy for which there are not yet technical screening criteria. Those are going to come next year as well. And in parallel with those criteria, the Commission may come forward with additional screening criteria for climate mitigation. So the taxonomy as it is today is nothing compared to what it will be like in a year, and then it will keep expanding and keep being a living document since then. So I think that's what we need to keep in mind when we are concerned about technical screening criteria not being available or innovative activities not being able to fit in, because we don't want to create. I don't see a strong reason to create a system full of loopholes now, and then afterwards we just have to close all those loopholes when all the criteria enter into force, and then people who thought they had issued a green bond will find that their bond is no longer green, right? So we prefer to do it this way. So yeah, hopefully that clarifies a little bit where we stand on the taxonomy. Do you want me to also touch on the grandfathering now?
If you could briefly, maybe, yeah.
It's certainly something that many people have mentioned to us. I think that this issue has 2 parts, and the first part is that there's just a little bit of confusion about what we've actually proposed. I admit it could have been a little bit clearer in the fact that when we're talking about changing technical screening criteria, because yes, indeed, the technical screening criteria, may be tightened, at least for certain economic activities where or certain sectors that we consider in transition, where we want to progressively tighten. When we're talking about that, we're only talking about unallocated proceeds. So there's 2 different ways of allocating proceeds in the proposal. You have the sort of gradual method where you're allocating one chunk year after year until you're fully allocated. And there's the portfolio approach, which is more for the financial sector. Bodo has mentioned this already, where we have more of where the allocation is about maintaining a balance between your portfolio of bonds on the liability side and your loans on the asset side. But when for the standard approach, or what we call the gradual approach, this is the changing technical screening criteria are really only an issue for those proceeds that have not yet been allocated. And we know that most issuers allocate their proceeds relatively fast, a few years after issuance. So a 5-year grandfathering period should be more than enough. Now, that doesn't mean that, you know, it'll be just fine and dandy for everyone. Indeed, this might pose you know, certain difficulties, but for certain issuers, for certain types of maybe long-term projects. But again, what we really want to keep in mind here is that investors also have expectations. So if you are an investor and you're buying a European green bond, you want to know that there aren't like 15-year-old assets in there that are, you know, that haven't been aligned with the taxonomy since 10 years, right? Because then you're not getting what you're paying for. And because there's actually, this is how some issuers operate, we did see the need to put in a threshold at some point. But, and this is the final point, when technical screening criteria change, it should happen in a predictable manner, right? So the goal is not to surprise the market with new technical screening criteria. Rather it's the opposite, and this should allow market actors to foresee and to plan ahead.
All right, great. Okay, thank you. I mean, the clock ticks fast. We'll try and go over some of the points briefly, linking in with what I was going to ask anyway, and some of the questions we've been asked. Laurie, there's been a few points raised about external verification, whether this will reduce costs, how will the quality of verifiers be checked, looking at the time scale for when it's going to come in, who's going to be liable if it turns out do no significant harm criteria are not going to be met. I mean, having looked at what's being proposed, I mean, how do you see the kind of external verification, the kind of landscape evolving, and is this going to dramatically change the way that SPOs have been done and things? Oh, you're on mute.
It's good to see, sorry for that. It's good to see that the creation of this specific system supervised by the ESMA, I think it's good to have an overall governance of what happened on the external review side. So this is really a new point that is brought by the proposal. But there is many, as you said, remaining question, especially regarding the temporality, because you've got this pre-issuance external review, which is mandatory. So it means that as we have as an SPO, it will be more potentially a verification of the alignment with the standard instead of an opinion with an assessment of an evaluation of an ambition, for example, which this is what we see now. I'm thinking about Shades of Green from Cicero or other players that provide an opinion at the end on the green credential and the level of ambition of a given green bond. It will be a bit different because it will become more verification than an opinion. So potentially the landscape can evolve in terms of players, in terms of, at the end, outputs that we have. First point. Then I would say in terms of temporality, there is still question because you've got this pre-issuance assessment, so you can qualify your green bond as an EU green bond. But then if after the post-issuance review, you finally have, let's say, a non-compliance or something not good, what happened in terms of labelization? Who is in charge of the supervision of that? What is the role of the ESMA? So there is potentially still clarification to be added in the proposal, just to see exactly the temporality, and even more with this, let's say, this taxonomy alignment plan that you have from 5 years at in up to 10 years in specific situation. There is question regarding the maturity of the bond and what happens if you finally do not reach the final alignment that you promised to the market within this 5-year period or 7-year periods, and what is the role of the external review throughout the life of the maturity. So beyond this post-issuance assessment or external review, it will be necessary, of course, to clarify and especially to see what is the role of the ESMA there in the potential interpretation. If the technical screening criteria are not really yet, the external reviewer role will be key to provide the final labelization. So it will be good potentially at ESMA level to have like a coordination or supervision of this case where you've got this necessary interpretation. And the question of temporality is really key again on when the label happen. Is it is it post-issuance? When the external review need to continue to come when you have this transition period between 5 and 10 years, and it's really linked with the tenor of the bond at the end. So it raises question, even if again, it's good to see, and we will receive that in the market as well, to see this mandatory external review with an official accreditation system, which at the end will define the profile, the professional experience and expertise that we are keen to see for external reviewer, with an official accreditation process, which is really good. But again, new question regarding temporality and the scope of the supervision and the governance at ESMA level as well.
Right. Okay. And now another point is on that's kind of part of the proposals is on reporting, which is a bit different again to what's in the green bond principles and is mandatory. Özge, what do you make of how that compares with what you've recommended in the past in terms of reporting on allocation and impact?
Thank you, Neil. Yeah, I will say on the allocation side, yearly allocation report is already a required practice under the green bond principles, and most issuers do so. So not much novelty here. However, the EU GBS requires an external review on each allocation report in the case of portfolio-based EU green bonds, instead of only for the final one. We believe that this could disadvantage financial institutions and MDBs community, since these are the frequent issuers of portfolio-based green bonds, and make it more costly for them. Secondly, there is a requirement under the EU GBS to prepare an allocation report within 30 days following the end of the year. We believe there is no need for such a prescriptive measure like this, and the timeline given is also too tight. It must be kept in mind that some issuers may have internal cycles of reporting which provide the necessary data, and which may not necessarily match with the timeline prescribed by the proposal. To come to the impact reporting side, I would argue that the impact reporting under the proposal is actually looser than the GBP, since it needs to be at least once. So this means one may be enough, whereas under the GBP, impact reporting needs to be done each year. It is recommended to be done each year. However, this difference and this looser nature may make sense, because I would argue that the impact of an EU green bond is arguably more predictable due to the taxonomy alignment. Nevertheless, I would like to highlight that there is an annual impact reporting obligation for asset managers under the Article 9 of the SFTR. So the consistency must be ensured in terms of at what frequency investors will need impact data to satisfy their own disclosure obligations.
Yeah, I think that's quite an interesting point. We'll come back to possibly in a second. And Ayla, I wasn't sure you were there for a minute, but the international aspect of this is something that Axel mentioned at the beginning. The Commission wants the EU to be a leader, wants to kind of set an example and things like that. That's all very well. From a practical point of view, the taxonomy is mainly an EU thing. How easy is it going to be for international issuers to meet the standards? If you have international activities as an EU institution, how easy is it going to be for you to do that? And what kind of initiatives are there and should there be in terms of trying to get some more international and global agreements so there could be more global standards?
Yeah, I think on these global standards and the global cooperation, Axel might know more about that one, but I think obviously it's a voluntary standard first of all, and it can be used by anybody who wants to use it, European or non-European. I think it depends a bit what you have. If you have somebody who is financing projects, I don't know, in the United States or in Australia, it might not be something that they are looking for, because they will possibly sell them to local audiences who don't need to use. If you target, for example, European investors by currency or by other means, with your issuance, then you might be interested in this one. Like I said, if you finance a wind farm in Africa, I don't think that's very difficult even for a non-European to show that you are taxonomy aligned. In other areas, that might be more of a challenge. The reason why they could care is that if you want to target European investors, they will need to report on their taxonomy aligned holdings, and EU GBS would then by definition be a taxonomy aligned investment. And while you don't need to use the standard, your investors might ask that, well, can you make a small additional effort, and then you would be aligned and I could report your bond as a taxonomy aligned investment. So I think the sort of the incentive to use it comes a little bit through the back door, if you like. No issuer is forced to use it. Not even EIB, although as an EU climate bank, I think it's quite natural that we have already flagged that we will use it. But this, I think, is the incentive to use if you want to attract EU investors to it.
Right. Okay. Yeah, we're running out of time, so just a couple more questions. Bodo, I mean, one thing we haven't touched on much is how the market is going to evolve. I mean, obviously there may be EU green bonds, there will be other green bonds. How do you see this kind of affecting, I suppose, the overall market in terms of the way the different asset classes, I mean, if they are perceived as different asset classes are perceived, if you don't meet the green bond standard, do you see that to be kind of a detrimental thing that may harm the, you know, your ability to execute bonds in the way that you've done?
Well, I think in this case it's quite a pity for that question that we do not have an investor here, because in the end they could describe better what they are looking for in the market. From my talks with investors, I have the feeling that everybody acknowledges that we are now in a new world there with the EU taxonomy, and allows issuers, lenders a certain time as well to gradually go there, that the business, the part of the business that the bank does in green assets aligns more and more with the EU taxonomy. So there will be a certain allowance time given by investors where I think they will accept both. But I think in the end, what we have received with these first two delegated acts is a common language on the first two climate objectives on the EU, and a precise definition, and the role of banks will, or issuers will be to adopt to that. So at a certain point, I think you cannot flag an activity as being green that is not aligned with already covered categories within the taxonomy. And then if your activities comply with the taxonomy, of course, you should then also aim to get your bonds labeled in the same way, and that is provided by the EU label then.
All right. Okay, well, we're going to wrap things up in a second. Just one final question, Axel, perhaps I can put to you in relation to a couple of things that have been said. Obviously, investors are having their own requirements put on them on what they need to invest in. This is voluntary. I mean, it is a mandatory standard with integrity, as Laurie said, but it is voluntary. Is this increasingly, though, I mean, effectively going to become through the back door by investors being told what they have to invest in, going to become more of a mandatory standard in the long term?
Yeah, I was trying to raise my hand earlier, and then I clicked on the button and a giant hand appeared, and then I removed it because it was a bit too conspicuous. But so first, to answer your question, then maybe I'd like to pick up on some of the other points. Okay, it depends what exactly, well, there's a lot happening on sustainable finance right now at EU level as well. And I don't know every little detail, but as a general message, I can tell you that we're not telling investors what they should invest in. We are telling what they should disclose in terms of information. And that's quite different. So you do, as an investor, also as an issuer under the new NFRD, which is called the CSRD proposal, you do need to say what type of activities, how green you are as a company, how green your investments are, etc. And of course, that will have an effect on the attractiveness, of the EU GBS down the line. I think maybe not right away. Now, the things I wanted to pick up on was the comment by Laurie on the label and the thinking of the EU GBS as a label, because of course there's a parallel to a label there, but we do still call it a standard. One thing that's quite important to point out is that the bond continues to be, the requirement is that the proceeds have to be 100% taxonomy aligned by the maturity of the bond. Right, so that gives the issuer quite a bit of time to adjust their course if something goes wrong, and that means that we don't want to create a situation where there's a risk that someone would suddenly lose that designation, that ability to call their bond a green bond. On the other hand, on the contrary, we actually expect investors who are, as we know, mostly professional investors, to make use of the information that's there, make use of the reporting, make use of the pre and post issuance reports, so the work done by the external reviewers, and to hold issuers to account and make sure that they're living up to their commitments. As you might know, there will be in Article 12 of the proposal, there's a requirement that European green bond issuers should also mention this in their prospectus for those who are covered by the prospectus. So that creates a sort of firmer legal basis for this. And then indeed there are some quirks, as I mentioned. One of them is the relatively short time that we have given to issuers to publish their allocation reports, and indeed that is, the types of things that do still need to be worked out. Well, yeah, I hope that answered your question as well, Neil.
Yes, that's great. Hopefully we've answered some of the audience's questions as well. We have tried to tie them in with what I've been asking anyway, and address quite a few. There were lots of questions, so sorry I couldn't answer, and well, my panelists couldn't answer all of that. We will call it a day there. Thank you all very much for your attention today. Thank you, of course, to my co-panelists for their insights into this topic. Thank you to ICMA and the VDP for joining us in organising this and making it work, and hope to see you again at another event. Thank you. Goodbye.